Happy Thursday to you, where we talk about trading the trend. The question you always ask yourself is, what trends are you riding? Boy, that's an important question. If you don't know, that might be a bad sign. So you want to really be thinking about what trends are you riding? Are you trying to play certain indexes, certain sectors, certain stocks? Maybe you might kind of realize in this session here today, I maybe don't like the trends I'm on. So we're going to talk about some trends here today, and we're going to kind of really, as we always do, look for kind of some of that relative strength we talk about. Just real quick, as we get started here today, we got JP with us, Austin, Bill, or BB. We got GH, Silas, Lawrence, Ricebird, Wiley, and many others. Welcome to all. We also have Gary as well, Dave. By the way, keep going. I'll just keep naming these off. And we also got Barb in the chat. So we got you covered here today. Now, our focus here today that we want to kind of really talk about is Barbara last week talked about, and I want to show you this. She talked about last week trading with a plan. Now, my kind of title of today's discussion is really plan over emotion, okay? And so we're going to follow up on actually what Barbara actually talked about and kind of continue that discussion. Now, just real quick, you can follow Barbara and myself on X. There's my handle. Barb will post her handle in the chat. And just remember, we do post educational examples and also announcements there as well. Now, remember with what we talk about, we'll talk about stocks and options, okay? And also remember when we talk about options, options carry a high level of risk and are not suitable for all investors. Also, the information here is provided for general informational purposes only. This webcast discusses technical analysis. I taught the fundamental class yesterday on trading growth and value. We'll follow up on that here today. It doesn't have to just be technical analysis. That's a starting point for many. It doesn't have to be the ending point. And there's many other types of analysis that are very interesting to learn about. So join in. And also remember that the paper money software is meant for educational purposes only. Investing involves risk, including loss of principal. Short options can be assigned at any time. And also remember that today we'll talk about kind of just briefly where the markets are. Any sectors have changed them from the beginning of the week. And when I say beginning of the week, we're talking about Tuesday and Wednesday since Monday was Labor Day. And we're going to talk about some individual positions. And we're going to talk about looking for bounces and reversals. And I specifically want to talk about reversals. Now, just real quick before we get started, if you said, James, with each class that we do, there's a playlist, okay? And so what you're now going to notice is, just like if you had a favorite show to watch on TV or whatever, you could follow it right on your Apple TV device or however you do it. And it's going to show you previous classes. Barb has the same thing. Any of us coaches have a playlist for the class that we teach, so you can go back like TiVo and watch those. The link that I sent to you is that playlist. If you have not subscribed first off to our channel, you can go right to this link right here, right dead center in the middle page. If you have subscribed, it will say subscribed, okay? If you have not subscribed, just subscribe. It's free. It's the first thing you could do, okay? Easy. Click the easy button. Now, also remember when we actually get going, let's kind of take a quick peek at where the indices are. And I want to start with really the Dow Jones, okay? So go back about a week ago. We kind of said that the Dow and the Russell was kind of leading the way a little bit. And then when you go back to, let's say, Tuesday, and that's the Tuesday right there, we talked about the market really breaking that diagonal support line. We said that the diagonal support line just kind of means that we've broken that momentum, okay? And then it tends to fall down to the horizontal support level. Now, that old breakout area is right around, let's say, 448-ish or so. Now, yesterday, this is 2 days in a row where we've seen some long lower shadows on those candles. Now, that might be some of those dip buyers who are saying, look, I want to try to get in on that short-term pullback potentially and try to ride that move back to the upside. Now, the good thing that we would actually have to say is, number one is it hasn't broken horizontal support. Two, we've actually seen some 2 days in a row buying Tuesday and Wednesday with those tails. And if we actually went back to today and said, what type of candle do we actually have today? That's a bullish engulfing. Now, if you go back and really kind of take a look at this, if we said the diagonal support is maybe a line of resistance, well, today we're trying to go through it again, okay? Now, when we broke down in the short term, we said, look, it doesn't mean the intermediate trend changed. It doesn't mean the long-term trend has changed. But it just kind of takes a little time to find if investors want to get back in. We're starting to kind of see some getting back in on some key names. That's what we're going to focus on here today. So some better price action here from the Dow Jones. Take a quick look at the Russell briefly. Russell, we're kind of in the upward channel, and it's kind of just pinballing back and forth in the channel. We did not come down to the bottom of the channel. We kind of came down about 2/3 of the way from the top. Still kind of grinding to the upside. Small caps are not dead here. At least if we're talking about it's still above support. That's what I mean by that. If we take a look at, let's say, the SPX, well, the SPX looks very much like the Dow. I don't know what you call that candle right there, but please help me out calling all technicians. Gap to the upside, gap to the upside. Now, we have to kind of say that, remember when we kind of talked about gaps, when we get a green candle on the gap down, we kind of draw a line right here, and we call that resistance. We call that the reversal. Well, the S&P gapped up, went right down to where that closing price was from that hammer day, and actually has never looked back. The S&P, now sometimes you can get just news that rocks the market in the short term, and then it comes out to be, let's say, viewed as not as negative. Sometimes that happens. People get a little trigger happy, right? Or concerned and sell. 2 days, 3 days later, it's like, oh, it wasn't as bad as feared. The S&P, if we kind of look at this gap, it's filled in the gap, okay? So there's kind of some healing going on with the S&P 500 here. And the last one, just real quick, is the NASDAQ. The NASDAQ, though, what we would have to say on the NASDAQ is there definitely is starting to kind of become some, now the word of the day is diagonal, okay? Boy, is there a lot of diagonal lines of resistance, support, the whole 9 yards. We go back to this chart, what you're now going to see is we have a high, we have a lower high, and we're kind of maybe trying to carve another lower high. Now, this doesn't mean that that's always going to be the Berlin Wall of resistance and we can never get above that. There are some key names in the NASDAQ that are getting a little reversal, okay? Now, so keep an eye on that. So NASDAQ had trailed, and it still does compared to the other indices. Keep an eye on the NASDAQ here, but it's still lagging compared to the others. When you look at the VIX, we do not see, now remember what the other day when the VIX was, let's say 19, okay? A lot of times people get so fearful. Well, actually, the higher the VIX goes, potentially the better, okay? So I don't know how much it benefits to be fearful because the VIX tends to be mean reverting, meaning the higher it goes, it can snap back down. The lower it goes, it can snap back up, right? And if you take a look at this, good sign or better sign, actually falling down below the moving average, the 10 and almost the 20. Again, if you've seen this over and over and over and over and over again, which I know many of you have, a lot of times investors use fear as an opportunity. Now, not fear by you, but fear by other investors or people that they're just taking advantage of other people selling. Now, the one thing I do want to kind of point out here is when we go to sectors, just real quick, are there any sectors that we should keep an eye on today? Any sectors that stood out to you? Now, we said yesterday, hey, keep an eye out for, and now I'm gonna, as I get an answer on sectors, let me kind of just do a little side chart here. We said yesterday, you might want to keep an eye on, let's say, the 10-year yield, okay? And if you look at that, that actually did break down through support. We talked about that at 3 p.m. yesterday. We talked about some of what might happen if that actually drops. Now, remember, if this drops, consumers might have to pay, or they might pay potentially less. That might spur consumption. They buy stuff, okay? And it also might actually be good, we kind of said maybe potential real estate, and we targeted the industry group of home builders. We'll come to that in just a moment. But if you take a look at that, that's a better sign that we're actually seeing on the TNX. Some relief, okay? Now, if we talk about sectors, now Lisa says, she talks about the IXY. Now, Lisa, I was in the great state of Illinois, and yeah, that's a great state. And it was not up near Chicago. It was on the south side. Had to drive back from Kentucky with my dear wife, Amber, who was roped into that. Everything was great until I got a speeding ticket in Wyoming. Anyway, a little fun there. Now, just real quick, if we look at, say, the IXY, is this trend dead? It doesn't look dead. It actually kind of looks like it's making some higher lows. We smooth out this chart, and you go back. I like to look at Heikin Ashi, and if you look at that, kind of the higher lows are still there. I mean, there's a low, right? That's a higher low. That's a higher low. The points that I'm referencing are the red and green candles. And so discretionaries. Now, if I said to you discretionaries, name some stocks in discretionaries. Like what? Now, remember, what we would say is you should have a list of each sector, some of the biggest names in the sector. You could actually copy and paste, if you will, and said, look, I'm just going to take the S&P 500 or the S&P 100. I'm going to just copy and paste the stocks that are in the S&P 100. And if I said, give me the consumer discretionaries, here's a list of consumer discretionaries right here. Let me kind of put this right there. Okay, so this right there is healthcare, consumer discretionary. The biggest one is Amazon. Now, the question is that just up or is it up and bouncing? Is it up and breaking out? Yes or no? Okay. Now, the other one we're going to kind of keep an eye on just real quick is IXC, which is the communication sector. I said that's a sector that a lot of times we don't really pay attention to. It's historically not been around as long as financials, energy, base materials, things like that. But I'm telling you, it's not funny, okay? It's just banging another brand new high. And here's the thing, investors will say things like, well, I've just been looking and I've been looking and I've been looking. Well, what's wrong with the chart in front of your face? Okay? The one that keeps hitting a brand new high over and over, okay? Or making another higher low. I think this is where investors need to be very careful about searching and searching and searching, and then versus having a real understanding of what setups are, taking a calculated risk, and practicing entry. The issue is not searching. The issue is practicing your plan and being willing to take risk in the paper money account. Now, I want to kind of start off with just real quick, one of those stocks in this space. Let's go to Amazon for just a moment. And what I want to do is I want to kind of just pull this up. Now, remember we said, what was the word of the day? Does anybody remember the word of the day? The word of the day, if you're from Wisconsin, okay, is diagonal. And if we take a look at this, what you're now going to notice is you kind of have like lower highs, and we actually have like higher lows. Now, some people might say, James, that looks like a pennant. That looks like an ascending triangle. I don't really care what you call it, okay? To me, we really have kind of like lines of support. Support could be horizontal or diagonal, and resistance could be horizontal or diagonal. I don't really care, okay? More of the story is we get touches. And so now if we all of a sudden we get the price breaking outside that range, it might cause some investors to come off the sidelines and say, hey, I've been waiting, the investor says, for an entry signal. Now, let's go back and say, is this maybe, is this just on the daily chart? Or if we look at the 3-year weekly, is there anything happening here? Now, if we go back to a 3-year weekly, one of the letters in the alphabet that we've talked a lot about is the letter V. Gosh, dang, that was horrible. Okay, sorry. Letter V and the letter W. Okay, so we have a big, massive V. Now, I'm not even going to, if we talk about the depth of that V, that's about 80 points. Now, I'm not even going to talk about where that potential target could be. The other letter that we talk about is a W. Now, remember, if this low does not come down as low as this, we got to ask ourselves why. Why is it not coming down as low? Well, maybe if there are sellers, there's not sellers to thrust it down to that 160, okay? Second part, if there are sellers, buyers are stepping in thinking that the price might go higher. So these V's, which could be very aggressive potential extension patterns, or these tilted up W patterns, they could also be continuations as well. Now, I want to go back to this just real quick. Let's say the investor said, look, James, I want to buy some shares of, let's say, now, by the way, we're going to do this in two different ways, okay? Now, let's say the investor says, look, I like to trade options and I don't like to buy shares as much. We're going to show both. And what we're going to do is we're going to do it quickly. Now, first off, if someone said, I like to do cash secured puts, I like to actually try to get a premium. I like to try to buy the stock at a potential discount and or one of those two. And for example, I like to trade the probabilities, okay? Now, the biggest actually thing is if I went into Amazon and we took a look at, let's say, the options, and we're talking about monthly options. We're going to do an option trade, stock trade. And if we said, look, we're going to go 20 to 50 days to expiration, monthly options, and we looked at, let's say, the put side. And if we looked at the put side, if we looked at the strike of 230, 225, 220, it kind of really depends upon, do you want the shares or a higher probability of getting the shares? Or, for example, do you want actually a greater chance of actually getting the income? And notice I didn't say 100% on either or. It's, do you want to have a greater chance to buy the shares? Then the investor might sell at 230. If the investor says, I really want to have a higher probability of getting the income / premium, then they might sell the 225 to 220. So it kind of depends upon what the investor's goal is. Now, if I were to ask you the question, which one would you do? Would you sell the 230, the 225, the 220? Which would you do? Now, in the paper money account, what we're going to show here, that's true, James. That's true. Now, here we go. I'm going to pull up the paper money account. We're going to go to the October expiration. And what we're now going to do is we're going to go to the October. We're going to look at, let's say, now if you chose, James, I like to kind of get a mixture of the two. The potential income, maybe the stock. If you chose that, you're probably choosing somewhere in the vicinity of maybe a low 30-ish delta. That kind of is like, I like that income, but maybe the stock. You're kind of in the middle, okay? If you chose something with a 40-ish delta, okay, you're probably choosing the 230. Now, what I'm going to do is I'm going to right-click on this 225. I'm going to go sell, and we're going to go to vertical. Now, if we were to do this in the IRA account, the investor might say, James, if I sold the put by itself, the risk is the stock could fall all the way to zero. And the second bad thing about that is if they sell the 225 put by itself, well, it takes more capital to do that trade. So what the investor might do, and we've done this before, we're going to buy a put below. Not that we think that it's ever going to become worth something, but what we're trying to say is we're just trying to reduce the buying power to do the trade. By doing that, it does increase the commission by 65 cents, plus we got to pay for the put. On this put, what we're going to show in this case is we're going to buy the 200. Now, when we do that, it does eat away at some of the credit. It does, okay? There's a pro and a con. And if we take a look at this, if we sold the 225, which we talked about, we bought the 200, which has a delta of 10 or less, cheaper put, out of the money, confirm send. And if we pull this up, we now see the kind of the numbers. Max profit, given this, I call this a short wide put vertical. This is especially familiar for many of you that are in an IRA. Second, we actually see the max loss is $21.66. If we did not buy the put, the max loss would be about $22,000, okay? If the stock went to zero. What's the probability? Could happen. Might not be as likely, but it could. There's the extra commission, 65 cents, to buy the put, the buying power effect, really mimicking what the max loss is. Now, trade number one, what we're going to do is we're going to send that order, and we're going to see if we can't get short. Now, this trade, you can think of this as this is really a cash secured put with downside protection. If this put, the 210, ever becomes worth something, that's not good. That actually means the stock went down, okay? So we're the investor who's bullish is saying, I don't want this to ever become worth something. I want this short put to go down in value, which means A, the stock went up, 2, the time decay expired or is evaporating, and the other thing is the volatility is contracting. So remember, when you do a cash secured put, you're trying to do direction, bullish direction, time decay, and volatility contraction. 3 different ways that trade could benefit and or lose. Now, what I want to do is we'll come back to the stock trade in just a moment on this, but I want to go back to one other trade that let's go back to the home builders for just a second. Now, just real quick, did anybody watch the home builders today? When you went through your due diligence, did you look at the TNX CGI? Did you say, if that rate is falling down, by the way, the bond prices would be going up, right? This is you could take a calculator and kind of do the basic math on this. If the rate falls down, the price goes up. Did anyone look at those prices today? Notice those. If you're aware of those, you can see those. Now, if you said, I don't do that, but I actually trade the stock, one of the examples, can anybody remember the example that we did yesterday? Now, one of the examples that I'm going to pull is we talked about, now I'm just going to kind of name a couple. I'm going to also name ones we didn't talk about. So one of them that we kind of talked about was Pulte Homes, okay? And we'll look at that in just a moment. The second one we also looked at is TOL. The reason why we kind of chose TOL is yesterday's word of the day was channel. And we said that maybe Toll Brothers could be poking inside that old channel. Now today, I mean, it's a couple of dollars, okay, $4.45 or so. Could it continue? The other one we actually brought up was DHI, excuse me. DHI, that is also the other one that kind of broke inside the channel. Now, the one that I didn't mention, am I missing any? I just want to make sure. So we said PHM, Pulte, TOL, DRI, excuse me, why am I thinking Olive Garden here? Okay, I didn't have it had lunch. DHI, Dog, Hawaii, Indiana, okay? And also the one that I didn't get to was Lennar. Now, Lennar, what you're going to notice is it's really lagging, okay? Now, what we're going to kind of show in this case example is, let's say the investor says, look, I want to kind of play the lagger. Now, we do not show this very much, okay? We just don't. But we're going to show this example where maybe the investor says, look, I want to buy a call, okay? I want to buy a call thinking that the price is going to go up. Now, if you buy a call, what's the risk? The debit paid. The other risk is time decay. The other risk is the volatility could actually decline and hurt the option value. Now, what I'm going to do just real quick is we're going to take these two trades. We're going to go back to DHI, okay? First time I got it right today. And we're going to look at Lennar just briefly. Now, if I went to, let's say, this LEN, and let's say the investor said, you know what, James, I'm considering about buying a call. Now, I'm going to kind of show you something a little different, okay? If we know if we chose a call in the money or at the money or in the money, tends to be a little bit more conservative because there's some intrinsic value and there's a greater probability that it could expire in the money. Doesn't mean it will. Now, what I'm going to kind of show is if the investor said, look, I want to kind of go out of the money by a hair. The out of the money is not necessarily horrible, but there is a lesser chance of the stock closing above the strike price, thus a greater chance of potential loss if we hold it all the way to expiration. Now, that's expiration. What about the next couple of days? What about the next 2-3 weeks? If the stock goes up, all of these calls could potentially make money, potentially. The answer is just in terms of a different amount. That delta is if the stock goes up $1, the delta is actually showing kind of the model price. If the stock went up $1, how much would the option go up by, given the model, right? 78 cents, 69 cents, 58 cents, 47 cents, 36 cents, 27 cents. And so they're all different nominal amounts. And what you're now going to notice is things that could affect that is the bid-ask spread and so on, and volatility, liquidity, and so on. But you're going to see that the rate of return on a $1 move up or down is different. Of course it is. What you invested in was different. Now, what I'm going to do is I'm going to click on this 590. So trade number one here is we're going to buy a slightly out of the money call option. Okay. Now you could run the numbers. You could run that Theo price. Go to Theo price. You could say, James, I think potentially I'm going to set a target at $5, and I think that could actually do it, let's say, in the next week. Okay. Well, if that's what you thought, we could see if those options are purchased at $5.90, the option could be worth $7.85. So it's taking the time decay out, neutralizing actually the volatility. Bill, be very careful. I almost messed that up. And what you're now going to notice is it's going to show what this option would be worth given a $5 stock move and the time decay fast forwarding a week to 9/11. Now, if we take a look at this, what we're going to do is we're just going to kind of let this be an example, okay? So the risk on this trade is that the investor could lose all of the 580, okay? And what we're going to do is send this. Now, is there a target on this? Well, of course there's a target on this, but I kind of want to use this as an example like we did with Alaska Airlines buying a call. When we take a look at Lennar, we got to say that when you look at Lennar, it kind of does have like an ascending triangle. Now, the one thing we would kind of also say is kind of noteworthy on this, remember we kind of talked about shallowest pullbacks, shallower and deeper pullbacks, right? So if we get pullbacks where maybe there's only an orange color, that's kind of a shallower or shallowest, pullback. Is that bad? No. Okay, the bull's liking Lennar so far. Now remember, if you buy a call, that's the right to buy the shares from now until expiration. You can exercise that right prior to expiration. Why? Because you bought it. You got that right. So that's number one. Lennar, we're going to buy a call. If I go back and say, hey, what about the Toll Brothers? Okay, let me just kind of take a quick peek real quick. Lennar fills at 580. Let me just kind of take a quick look. So if I look at, let's say, Toll, if I went back, anything, so I'll double check that, but I'm going to also go back just real quick, PHM, okay? I want to see just real quick, where do those get filled? That's kind of weird. I'm not seeing that. And DHI, okay? And I want to see that. I might have had a paper money glitch on that. And what you're now going to notice is I'm going to go back to DHI. Now on DHI, if I pull that up, this is one that's kind of been really following that blue line. Okay, now the blue line is just your 10-day exponential moving average. And it likewise has really kind of had shallowest pullbacks. Okay, these little orange candlesticks, which really means not much of a sell-off. Shallow sell-off means higher lows. Hallelujah. Okay. Now, let's say the investor said, you know, James, I kind of like to practice doing a cash secured put. And if we did a cash secured put and said, look, I want to sell something closer to the current stock price. Well, if you did that, you don't mind to be the buyer of the shares at the strike price. Okay, so you got to understand that. The goal is not necessarily maybe income as much as you maybe want the shares. Still could get the premium though. Now, if the investor said, I want to practice selling that. Well, if they sold the 175, okay, we're going to sell the 175, and then what we're going to do is we're going to buy the downside protection. Now, I'm going to show this in a lower dollar account, okay? Now, in this lower dollar account, if we look at this, we're going to do the 175, 150. Now, in this account, what you're now going to notice is, I want to kind of just show you this. If we did this in the margin account, you're going to see the max loss 1948. Well, if you actually went to, let's say, the IRA account, you're going to see that it's going to be 1948. So it doesn't really matter which one we use. The numbers are the same. The break even, the max profit, the max loss, the commission is the same, and the buying power effect. Now, we're not going to do that in the margin account, because if it had 1948, that is going to be way above and beyond what that account should typically be taking in terms of a loss. Now, what we're going to do, now that's if it had a full max loss. Trade number 3 here. So we did Amazon, we did Lennar, we bought the call. Amazon was a short wide put spread. Third trade is a short wide put spread on DHI. Now, if we went back and took a look at this just real quick, is notice the break even, okay? So the break even is just the strike price, the option that you sold, less the credit, okay? And we can see that break even right there. Now, that's not break even today. That's break even at expiration. Now, what we're going to do is we're going to go ahead and send that order. And there it is. Now, in the chat, there's a survey. Click on that, okay? It's 2 whopping questions. By the way, thank you for many of you that filled that out yesterday in that class yesterday. Click on it. Please fill that out. So the first thing I did this morning is look through those questions. And then what I tried to do is loop those into future classes as kind of material that we could discuss. So by you filling out that survey, it kind of lets me know of some things that I can focus on to help you, okay? So thank you in advance for filling those out. Now, I want to also, Isha Hasha 8 said Meta still going strong. Now, in the next 2 examples, I kind of want to focus back on that word of the day, diagonal. Now, I'm going to bring up just real quick Meta for just a second. I did see Meta, okay? If we look at Meta and said, did it break its diagonal line? Yeah, okay. Now, when you draw the diagonal line, what we're really looking for is if we could kind of take some lower highs, lower highs, lower highs, what you're now going to see is that's probably the angle of the line. Now, you could also take this in kind of a different way. These Cajole dots, if I go back to that little right there on the little test tube, you're going to notice that in this, and I'll share this chart with you in just a moment, but if I look at this, if I go to the settings here, it's only showing us show Cajole the dots, yes. Now, what you'll notice is below, now why do we want to see the Cajole dots? Well, the Cajole dots are kind of visual help as far as showing a bullish bounce setup. They could also be helpful to actually helping us draw support and resistance, especially if I'm not any good at it. Talked about that yesterday. Well, could I just flip that and kind of say, could the show the CBLOHD, which stands for close below the low of the high day, it's the opposite of Cajole, okay? Click on yes. So the Cajole is really the green dots, as you'll see down here. Okay, and you're going to see that it's green, and you're going to see that the close below the low of the high day, it is going to be red dots. So I put that on there. Let's kind of look and see this. And why do I bring this up? Well, because if you said, James, I really struggle with drawing the diagonal lines, and I'm kind of frozen in an action. Well, let's kind of look at this. Where's the dot? The first dot's right there. The second dot's right there. The third dot's right there. And so what I'm going to do is now going to take this angle going forward. Now, when we were in kindergarten, we kind of played dot to dot to dot to dot to dot, right? And what you're going to notice is that's our line. I don't want to talk about Meta because if you look at Meta and we compare it to, let's say, Netflix, it's a little different. Why? Well, if we look at, let's say, and let's assume that I can't draw the diagonal line. I don't have experience in the market. I don't know anything, okay? Well, if I kind of took this exact point of what I've just been saying is, if I went from dot to dot to dot to dot to dot, you're going to see that's one angle. Now, remember, some of you that are perfectionists, but don't worry, I am too. My kids are like, look, you want everything perfect. Absolutely, okay? Now, here's kind of when you get older, some of us get like that, okay? We have issues, but we're fine with it. Now, here's the deal. We're going to extend it to the right. So first thing what you're going to notice is we got about 4 dots on that. Now we might draw it a little differently and say, look, I got a dot there, dot here, dot here. I got 4 dots here. Now remember, so you're never typically going to have one line of resistance. We could have probably 2 lines. And if it broke one line, it's probably the earliest sign of the setup. If it broke the other line, it's just more confirmation. Now, how many of you feel like you could do that? How many of you feel like you could take this chart and go from red dot, 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 or green dot, green dot, green dot, green, and just draw the lines? I'm going to tell you right now, if you can't draw the lines, no wonder you don't get in. That's what it really comes down to, okay? And if you don't draw the lines from the red lines, no wonder you get in late because you're not watching the lines. That's how serious it is. Okay, now one of them that we're going to talk about is little netty flicks. Now we could also kind of draw this now, not just diagonal support, diagonal resistance. We could also kind of take this potentially for sometimes from a horizontal support resistance. Now, if I take a look at these 3 dots, 1, 2, 3. Now, okay, green dots, potential support. Red dots, uno, dos, tres. Okay, resistance. Now, what I'm going to do is I'm going to draw a line and say this is kind of our area of support. This right here, probably like the area of resistance. Now, that's a little higher. Now, this kind of gives us the vicinity. If we're kind of looking at just the dots, that's kind of the range. Now, sometimes when we draw levels, some people like to kind of draw from wicks. If we're trying to really draw from bodies, we're probably going to draw that line a little bit lower because we had more touches in the vicinity of 12,040. Now, here's the deal. We've got 10 minutes left. I want to get to 2 more trades. Now, this is a bigger dollar stock. So there's going to be, if we said we're going to buy shares of it in the paper money account, it's probably going to be, it's just going to eat up capital. If we did, let's say, an option trade on it, the spreads might be wider, okay? But higher price dollar stocks, typically, maybe sometimes less liquid, wider bid-ask spreads, probably not going to be getting in and out as much because the spreads are wider. You could try, but it might kind of be tougher to do. Now, what I'm going to do is on this one, just real quick, is I'm going to go back to the trade tab. Trade number 4, we're going to look at the NFLX. And first off, when you look at the spread, okay? So when we look at, let's say, the open interest on this, just quickly, we're looking at the 17 October, and we look at the open interest. Again, like I was saying, the higher price dollar stock, it might be a little harder to get something that's liquid, okay? Now, when we look at the spreads, you're talking about something that's 65 cents wide, but you got to remember, this is not a $200 stock. So what we're going to show in this case example, let me kind of open up to all strikes. Let me kind of go down that table just a little bit. Let's kind of look at that delta 30 to 40 as kind of a looking point. And if I chose something maybe like in the middle where I saw a little bit in the middle between 30 to 40 delta, it's really the 1200 strike. If we look at the 1200 strike, a little bit better on the bid-ask spread, 45 cents wide-ish, it's moving on us. What we're going to show in this example is we're going to sell the 1200 put. You sell the 1200 put, you think the stock's going to stay above, and then what we're going to do is we're going to buy the put below. Now, we're not going to buy the put below with a delta of, let's say, 10 or less. We're going to buy the put below that's closer to the strike that's sold, and this is more your classic vertical. So we're selling the 1200, thinking the price could stay above, buying the downside protection. The difference between 1200 and 1190 is $10. Now, you're going to now see that the credit there is 332. 332, the potential max gain. The 668, the max loss. Take those two numbers together, it represents the spread. There's the commission and the buying power effect. Now, verticals for many people that are trading a market at brand new highs and or many stocks that are brand new highs, verticals might be a strategy that many investors might consider, okay? Now, if we take a look at this, we're going to fire this in the IRA where it can handle that potential loss of 668 and not be outside the risk that it's willing to take. We're going to go ahead and send that order. So that's trade. Let's see, we did Amazon. We did Lennar. We also did DRI. Check me on that. Okay, let me just go back to something just real quick. Yeah, so Amazon, Lennar, Netflix, okay? But I got one that hasn't filled. Yeah, DHI is not filled yet. That's trade number 4. Now, if I go back and see why is it not filling? Well, here we want a 552 credit. Where's the mid price? 542. So if I lower this credit by 10 cents to see if it can fill, we'll kind of double check and see, we'll kind of keep this open. Does that fill? So if we do not see it in the monitor tab underneath filled orders, it hasn't filled yet. We're at the mid price right now. Doesn't mean it's going to fill, but probably have a better chance for it to fill. Okay. Now I also want, now there it is. So we had to move it around. Okay. Now this happens in real life. This is not just in paper only. Just because the investor puts in, oh, I want this, it doesn't mean it's going to fill. You got to get it filled. So far, these are the trades we looked at. Now I also want to go back to one other area. Now last week, so my son, we bought a car. Well, we went car shopping, okay? And I don't know about you, but it is very interesting to really see the prices of cars, okay? Now, I'm going to kind of go back to, now, by the way, it's not just the prices of cars. It's like if you borrowed money so number one, the price of the car. Number two is if you did borrow money on a new vehicle, I overheard someone saying, hey, if you lease this vehicle through your company, the interest rate tends to be 11 to 13%. They said to the person asking for a lease truck. I was like, 11 to 13%, choking, okay, on my water as I drank it. And so this kind of goes back to a theme is those who have cars, they actually might, for example, be holding on to their cars longer. Some of us, we're old people, okay, or I would say wiser, okay, not old, wiser, okay. And so we like to hold on to some of those good vehicles. That's me. I'm a value person. I drive a Toyota Tundra 2013. She just keeps going, okay? I want to be on the magazine doing the Toyota jump. I'm not a recommendation for Toyota, but some of us have vehicles we hold on to it. Now, what does this have to do with O'Reilly's? Well, some of us, as we have like kind of things we have to fix with those cars that we historically bought, we buy parts from AutoZone, O'Reilly's, whatever, okay? Now, if you take a look at this, one of the stocks that's kind of been doing a little MACD divergence here, and it's increasing, it's O'Reilly. Now, O'Reilly back here had a 15-to-1 stock split, which means the stock was 15 times higher, and then they split it, okay? And one share became 15, okay? Now, what you're going to notice is when this split, this is kind of what they call the post-split high, okay? Probably $94 times it by 15 was really the high. In the last couple of weeks, as these interest rates have stayed high, car prices have actually stayed high, tariffs and so on, you've actually seen O'Reilly's hit a brand new high. The one I want to finish on here, now remember, let's go back to the green dots. I can't draw a line. Can we draw a line touching the dots? What does that help us do? Helps us see resistance. If we actually put those lines on top, same thing that we did before here. Can I put those dots on, and could we also see those as well? Those ones we see are really right there, and right there, and right there. So it's kind of that number is getting in my way. This is really the resistance where we're getting touch one and touch two. It's that price. You see that when I move it? There's the red dots right there, okay? Try to stretch. It's not, it's right, and I think you can see it. Now, what I'm going to do is we're going to buy the shares of stock, okay? Buy custom with stop. Now, what I'm going to do is I'm going to set that stop underneath this diagonal line. That diagonal line, if I went back and kind of put this back to price, that price is about 103.11, okay? So these higher car prices, these higher interest rates might help a business that's selling car parts for those who want to actually not get into that transaction and buy a car for $60,000, in which they paid 10, 15 years ago, half that, okay? Now what I'm going to do, and it looks like to be the same thing, 101.04. So I'm going to take this in 101.04 as the stop. Now I got to wrap this up. So this is if we get this filled, and we're going to try to, 6,500 is the capital size we're looking at. It's going to be about how many shares? 62 shares of stock. We'll put that in, plus 62, stop, there it is. Now this is a little bit tighter stop, okay? You might say, I'm not going to, we don't have time to double check, but you might double check that stop and say, is that low enough, okay? So it's kind of a tighter stop initially. The investor might even take a lower stop. They might say, look, I see support at 101, less 2 to 3%. If we chose that, it's going to really be about 98, and I think I messed up on that, so I'm going to lower that just a hair, and that's the number we're going to do. So this will be the fifth and final trade that we did here today. Now remember, coming up next, we got a webcast right at the top of the hour. Join us. We also, for example, quick reminder that you could actually follow us right on X, formerly known as Twitter. Barbara and myself, all of us instructors are on there. You could also, for example, join us right on our Trader Talks channel. Okay, right here. And also remember that we have a subscribe, it's free, okay? And also a quick reminder that here's the playlist for this class. Now, when I'm not teaching, I'm on X. Okay, so you can follow myself and Barbara right on X, and that way you can kind of see different things that I post throughout the day. So feel free to join us. Now, I want to give us a quick reminder that with what we discussed, all investing has risk. When we talk about stocks and options, that's up for you to really decide if that's something you would consider for yourself. Also, want to, for example, just quickly remind you that this class has been recorded, so check back on the recording on that playlist. Thank you for actually joining here today, and this has been the class on Trading the Trend. Have a great day. Stay tuned for our next webcast coming up right at the top of the hour. Take care. Bye-bye.